Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 29th of April. Starting off with Advanced Energy, where we've had rebound just above the 200-day moving average at 1.95, which is normally a plus if we don't actually need to touch that 200-day line. Rising trend channel from back in March last year, top of the channel at 4 pence, and while we're above the floor of the channel and the 200-day line, looking for 4 pence as soon as the end of next month. If you're cautious on the shares, then maybe you'd wait for an end-of-day close above the 50-day moving average at 2.6 pence. But with the bear trap that we had just below that November floor there at 2.03 pence, we should be on our way over the next few weeks. A stock which has plenty of friends at the moment is Amigo, and here it's all about the 20 pence level. That's because we've had intraday spikes through that zone over recent months, July, August last year, and then in March as well. End of day close through 20 pence should be enough to take us to the top of the rising trend channel from December up to 26 pence, maybe over the next couple of weeks, or hopefully even the next couple of days, but a couple of weeks, let's say. Bigger picture target for people who are besotted by the stock, up to as high as 50 pence over the next 2 to 3 months. That's a resistance line projection from March last year, but obviously that is the best case scenario. At the moment, we're sort of tracking towards the top of that December channel at 28 pence or so, and 28 maybe by the end of next month as a conservative target, 2 weeks or less, obviously, if you are keen on the shares. Stock which seems to have bubbled up quite nicely over the recent past is Blackbird, a stock which I hadn't actually heard of until, or remembered until very recently. I think it was called Forbidden Technologies before. Here we've got a classic gap higher, and then days following that gap holding, and then days following that with a stretch to the upside. The development today is that we're likely to close above that March peak at 29.65. The longer we stay above that, the greater the chance of a move not only to 35 pence or 36 pence, which is the top of that October 2019 trend channel, but best case scenario target perhaps as soon as the end of next month, up to 50 pence plus for Blackbird, if we keep trucking as we are. But the big plus point here is that unfilled gap to the upside that we had at the beginning of the week, a very strong configuration. When you see that, and that tends to be the case. We also had a gap at the lows, which was there in March last year, and we're sort of echoing that kind of move, as we did actually in August the year before. So this stock got a bit of form in terms of gapping higher and following through on the gap. On to Botswana, and here we've got a situation which is perhaps slightly less dynamic, but the thing to watch out for here is an end-of-day close or a weekly close above a penny. If we can get that today or this week, next week, then the target here could be as high as 1.6 pence at that February resistance line projection from last year. Stop loss on the bull argument back below the latest bull flag, 0.85 at the 50-day moving average, so above 0.85, looking for as high as 1.5 or 1.6 pence perhaps by the end of June. Stock which I haven't covered enough, I feel, over the recent past, but here it is today. We've got EQLS Group, similar to the last stock we looked at actually there, with a little breakthrough resistance. That initial March peak at 45 pence, so an end of day or end of week close above 45, should take the shares on their way for a new leg to the upside. And that would be at a March resistance line projection currently pointing at 67 pence. Time frame on that maybe by the end of next month. We're pushing it, otherwise maybe sometime in June for that. Stop loss at the moment, probably back below the floor of the channel and the 50-day moving average at 39 pence. That should do the trick and is reasonable in terms of risk reward. One of the stars of the market since it came to the market is Helium One, and could see the professional investors on the stock right from the start, right almost from day one. Situation here now is that we've hit one of our previous targets, the December resistance line projection at 20 pence. In fact, it's gone to 20.5 today. End of day close through 20.5, and that resistance line there could take us to a steeper ascent, which it looks as though we might get, which is a March resistance line projection heading towards 30 pence. The upside valid while we hold above yesterday's high at 17.25, so above 17.25, looking for 30 pence as soon as the end of next month. The best trigger here on a fundamental basis was that the shares never went below the placing price, and also we had a closed gap down in the middle of April as well, a couple of weeks back, which is a very positive sign when you close back above a gap to the downside. So a few lessons there. Onto Jaywing, which I covered a little while ago, maybe a week or two ago, and good to see it back again as one of the main risers of the day. Just try to stretch into new ground here. 15 pence the high last week, intraday high for the shares. So end of day close above 15 could be enough to take us up to 25 pence in the month that follows any end of day close or any weekly close above 15 pence. So looking very solid there for Jaywing at the moment. Myhealthchecked is the next contender, and here's a stock which was talked about a lot on the Sunday roast. Pulled back from 7 pence after a bull trap through that level, but we're still in a rising trend channel from December. Floor of the channel at 4 pence, and while we're above the floor of the channel, looking towards 7.5 pence at that December resistance line projection. If you're a fan of the stock, you might be able to target, or actually quite rightly target, as high as 9 or even 10 pence by the end of next month, if the shares move up directly from here, which, as you can see from the past, they have the ability to move quite well. But 7.5 pence the target, while we're above 4 at the moment. On to another stock which is rehabilitated itself very well so far this year. Predator, in fact, started in January on the upside, had a pullback from 18 pence plus earlier in the month, but support in recent days has come in above the 50-day moving average. Again, it's a positive when you see a stock or a market able to find support above a key moving average. Key reversal to the upside off support yesterday, which is a decent buy signal as well. We've had a follow through. Want to see an end of day close through that mid-April peak at 14.5 pence, or a weekly close. If we can get that over the near term, either this week or next week, then the target here would be as high as 30 pence, and that could be seen perhaps as soon as the end of next month. Otherwise, if there is a breakback below the 50-day line, that's now at 12 pence, and that would delay the upside scenario. But we've got a broadening triangle here, and it looks pretty strong for Predator at the moment. Moving along to a stock which gave the bears a bit of a challenge earlier in the month with a gap down from 40 pence, Pantheon Resources. Current situation is that we were looking for an end of day close back above the floor of the gap at 30 pence, which we got on Tuesday, and it looks as though we've got some new support coming in for the shares at 30 pence, or just around the 30 pence level. While there's no end of day close back below 30 pence, looking to fill that gap and maybe stretch up to 40 pence over the next couple of weeks. If you are cautious on the stock, then maybe wait for an end of day close through the 200-day line at 34 pence. Overall pattern here is that we can get back above the 200-day line relatively quickly. We'd be looking for a best case scenario over the next 2 to 3 months as high as 60 pence, which is the top of a broadening triangle from back in September. Just a couple of situations to go. One is a stock which has had a vertical move to the upside, pretty impressive. And you can see that I looked at this before because we had that break there in February, but there wasn't the follow through, it wasn't sustained follow through there. The current situation is that we've broken above that mid-February peak at 1.5 pence, and while we remain above that, looking towards the top of that rising trend channel from back in October at 2.5 pence as soon as the end of next month. This stage only really back below the old initial April resistance at 1.25 pence, really questioning the buy scenario, and obviously we were on the lookout for the type of retracement that we had from that mid-February peak, just in case the shares do a volte-face anytime soon. Finishing off with a stock which makes occasional appearances here, and it's back again today. Tissue Regenix. Here the reason for the inclusion is one, the rebound from above the 200-day line at 0.48 pence, and the second is the way that we've looks like we'll get a key reversal to the upside, i.e. breaking yesterday's low and then breaking yesterday's high. If we can sustain the area above yesterday's high is 0.58, so if we can remain above that, and the broken February resistance line. Then we're looking to not only 0.7 pence, but the top of the rising trend channel from back in the summer of last year at a penny, and that could be seen as soon as the end of June. But a bit of an early situation. Want to see the shares consolidate at or around current levels to confirm that this stock is on its way. That's it for me today. More updates tomorrow.